Real estate LLCs or limited liability companies can shield your personal assets while letting you keep control of the profits from your properties. So when you finish this video, you will know what a real estate LLC is, how owning real estate in an LLC compares to owning in a corporation or sole proprietorship, how they're taxed, the benefits and downsides of real estate LLCs, and how to set up a real estate LLC step by step. Hi, I'm the business guy, so why should you listen to me? Because I'm the CEO of Asset Protection Planners, the nation's largest asset protection firm. We have attorneys on staff, and I've been in the business for over 30 years. Plus, we've set up literally tens of thousands of LLCs. I've also been investing in real estate for over 3 decades, and so you can keep up to date. Click subscribe and give a thumbs up, as this would help us out a lot. So what is a real estate LLC? A real estate limited liability company, or LLC, is a business structure designed for property transactions that separates your personal assets from your business dealings. In the event of legal issues, your personal liability is limited, protecting you from being personally liable. In other words, the LLC gets sued instead of you, so you can continue to live your life, enjoy your home, your money, your car, and not worry about losing everything you own and needing to sleep under a bridge drinking wine out of a paper bag. Furthermore, a real estate LLC allows for multiple members, enabling a bunch of investors to pitch in and buy property together without the individual liability of personal ownership. This flexibility makes it an attractive option for those looking to buy, sell, or lease properties collectively. The big benefit is that you can more easily take on investors, so you can buy larger and larger properties that are even more profitable and take less of your time than single-family homes. Economies of scale kick in because with a large enough multi-unit property, you can hire an on-site manager that takes care of collecting all the rent and maintaining the property. So you save time because instead of unplugging toilets, you free up your time to look for the next deal. So how does that work? As the manager of an LLC, you can have 100% of the control with little to no liability, even if you have other members who have pitched in to buy the property with you. You use your business and real estate investing knowledge and have other people pay the down payment to buy the property. Now think about it. Would you rather buy one single family home where you have to yank the down payment out of your own pocket that you have to manage and maintain yourself? Or would you rather own 50% of a 200-unit apartment complex for no money out of your pocket and hire somebody to oversee it? Naturally, you'll want to have some real good legal advice and work with accredited investors so you don't run into securities issues. But using real estate LLCs and other people's money, you can do this over and over again. And that's how real wealth is built. Think about it. As of this writing, billionaire Jeff Bezos only owns 9% of Amazon. Elon Musk only owns 20% of Tesla. So new business owners need to pay attention to this instead of tightly clutching a nickel saying, mine, mine, mine. In other words, you get a lot richer managing a group than doing everything by yourself. Okay, now let's compare real estate LLCs to corporations, and here are the key differences. Now, both real estate limited liability companies and corporations, such as S corporations and C corporations, offer liability protection. But here are the huge differences on how these structures affect your tax bill. LLCs benefit from pass-through taxation by default. Profits and deductions flow through the LLC to your personal income tax return. In contrast, corporations have some detrimental tax disadvantages for owning real estate. In other words, CPAs say clearly, own real estate in LLCs and don't own real estate in corporations. And here are some reasons why. Number one, limited deductions. Corporations may not benefit from some tax deductions and credits that are available to individual property owners or other form of business entities like LLCs. For example, personal deductions for mortgage interest and property tax are not as readily available at the corporate level. Higher capital gains taxes. When a corporation sells property, it may pay higher taxes on capital gains compared to individuals or other entities. Corporations do not benefit from the lower tax rates on long-term capital gains that individuals enjoy. FIRPTA withholding. What does that mean? If a foreign entity holds real estate in the U.S. through a corporation, it may be subject to the Foreign Investment in Real Property Act, or FIRPTA, withholding requirements, which can complicate the sale of property and affect the liquidity and profitability of the investment, inflexibility and loss utilization. C corporations cannot pass through their losses to their shareholders to offset other personal income. This can be particularly disadvantageous in the early years of real estate investment, where depreciation and other costs might exceed the rental income. Complications in estate planning. It is not as easy to transfer real estate to your kids that's held in a corporation. Plus, your heirs will likely not qualify for the step up in basis that individuals receive. This can lead to higher estate taxes and more complicated estate planning. For example, let's say you bought a house in 1990 for $100,000 and now it's worth $1 million. You die, and for tax purposes, your kids will inherit the property as if they bought it for $1 million. So if they sell it for $1 million today, they pay no taxes. If they profit $1,001,001, they only pay taxes on the dollar. That's what a step up in basis means. This is because the basis upon which the profit is calculated steps up to the appraised value of the property on the day they inherited it. However, if that property was in a corporation, the kids would have to pay taxes on the whole $1 million. If they sold it right away and distributed the proceeds, they could get hit with, for example, a $370,000 tax bill. But if they inherit the property in an LLC, since the taxes and deductions flow through the LLC to the new individual owners, the step up in basis benefits flow through to them as well. Bottom line, owning real estate in an LLC has tremendous tax advantages compared to owning real estate in a corporation. Real estate LLC versus sole proprietorship, or owning the property in your own name. Choosing the right business structure. Operating as a sole proprietorship, or holding the property in your own name, is often called the simplest form of doing business, requiring no formal registration of paperwork to start. That is, until a lawsuit strikes. This simplicity comes with some significant risks. Unlike a limited liability company, a sole proprietorship does not separate personal and business assets. This means if legal issues arise, such as claims against your property, your personal assets could be at risk. In other words, without an LLC, the liability on your rental property could jump over to you personally and take your personal residence and empty your bank account. An LLC, on the other hand, offers a layer of liability protection by distinguishing between personal and business assets, providing a safeguard that a sole proprietorship lacks. So when somebody sues the LLC, the lawsuit stays inside of that LLC and you don't need to bring the pain home. Advantages of forming a real estate LLC. Number one, enhanced liability protection. Establishing a real estate LLC is primarily aimed at minimizing your personal liability. Consider a scenario where an injury occurs on your property, leading to a lawsuit. Ownership through an LLC means that any legal action targets your company and not your personal assets. This structure confines potential financial losses to the business's assets. Similarly, if the LLC fails to meet property loan payments, unless you personally guaranteed the loan, your personal assets remain shielded from creditors. Benefit number two, tax benefits. While an LLC doesn't remove your tax obligations, it does offer advantages that can reduce your tax liability. As we've stated, real estate LLCs benefit from pass-through taxation, where your income is taxed once at your personal rate on your Schedule D, avoiding tax at the company level, then more tax at the personal level, as seen through other business entities. Additionally, managing rental properties through your LLC, our tax attorney said, that some of you might qualify for a 20% business tax deduction on income from your personal taxes, leveraging more savings. That is something that I just learned about. It's in the U.S. tax code, and there's a provision known as the Qualified Business Income Deduction, or QBID, or Section 199A deduction, which allows owners of sole proprietorships, partnerships, S corporations, and LLCs to deduct up to 20% of their qualified business income on their personal tax returns. Check with the CPA for details. Number two, simplified partnership investments. Incorporating partners into your real estate venture is more straightforward with an LLC. Instead of the complex process of changing property deeds, which also involves lenders, you can adjust the LLC's operating agreement. This document will outline each partner's ownership stake and detail how profits and losses are divided, streamlining the process of collaboration and investment management. Okay, now let's talk about the downsides of forming a real estate LLC. Number one, risk of triggering the due on sale clause. Transferring existing properties into an LLC does carry the risk of activating the due on sale clause in your mortgage agreement. This clause allows lenders to demand full repayment of the outstanding loan balance when property ownership is transferred. If you are unable to meet this demand, it could lead to foreclosure. Now, it may be possible to negotiate with your lender to waive this clause, particularly as you retain ownership through the LLC, but success is not guaranteed. Loans that Fannie Mae and Freddie Mac may have purchased from your lender may not trigger the due on sale clause because the regulations seem to allow transfer to LLCs. However, not all loans are owned by these institutions. That's one reason why we set up land trusts, which do not trigger the due on sale clause. Then we have a separate piece of paper called the assignment of beneficial interest that assigns the ownership of the land trust, or more technically speaking, the beneficial interest in the land trust, over to the LLC. So as long as it's between a 1 and 4 unit residential property, the bank can't call the loan due as long as you remain a beneficiary of the land trust. And you are. There you are in the land trust. But if a lawsuit comes knocking, you can show that extra piece of paper where you have assigned your beneficial interest to your LLC. So you have the privacy of the land trust and the liability protection of the LLC. Limits of liability protection of an LLC. Partial liability protection. While an LLC generally protects personal assets from business liabilities, there are exceptions where personal liability can still arise. For instance, if you personally guarantee a business loan for your LLC, the business fails to meet its obligations, creditors can pursue your personal assets. Additionally, personal negligence or misconduct in managing property can also lead to direct legal accountability, bypassing the LLC's protective barrier. Financial considerations of maintaining an LLC. Additional operating costs. Setting up and maintaining an LLC involves initial and ongoing expenses that can impact your financial planning. The initial formation of an LLC typically requires a fee, plus there are annual fees to keep the entity in good standing. Usually it's only about $50 to $100 or so, as it is in Wyoming. However, these annual fees can vary by state and can be particularly high in places like California, where they reach up to $800 a year. Now, these costs need to be factored into your budgeting decisions when considering an LLC for your real estate investments. Okay, so how do you set everything up? Well, here's how I like to do things. You have one LLC per property. That way, when there's a lawsuit on one property, it doesn't take all the rest of your property. So cubbyhole your liability with one LLC per investment. Then you have another LLC that collects all your rents. So if you have 30 properties, you don't open 30 bank accounts, one for each LLC. That's too much work. Your LLC doesn't have to have a bank account at all. I like setting up one LLC that collects all the rents and pays all the expenses, and you can use accounting software to separate the expenses for each property. That one LLC doesn't own any property. So when it gets sued, it doesn't own anything. So there's nothing to take. That is, you just shut down the bank account, set up another LLC, and use the new LLC to manage your properties. So you have one LLC over here to manage all of your properties. Then you have all these LLCs down here without bank accounts that own each property. For more info, see our video on real estate asset protection. Here are the steps to establishing a real estate LLC. Forming a real estate LLC made simple. Creating a real estate LLC follows a similar process to forming any standard LLC. If you're serious about forming an LLC, feel free to visit us at assetprotectionplanners.com and you'll get a lot more free information there. And if you want us to do the work for you, call us now. Now, if you're just curious, we're not freeinformation.com. We're a business, so go on our website for free info, and if you call us, that means you want to hire us to do the work for you. Next, Select your business name. Choose a name that reflects your business. I like using the address of the property, such as 123 Main Street LLC. You can, if you want, include terms like real estate or properties. Ensure your name ends with LLC and complies with state regulations. Now, certain terms like mortgage or investment or banking require special permission from states like New York, and terms like urban development might be prohibited. So verify your chosen name's availability through your Secretary of State's office, or give us a call if you want us to set up the company for you. Next, appoint a registered agent. The registered agent handles legal correspondence for the LLC. This agent must reside in the state where the LLC is formed. Now, we provide this service in all 50 states. Next, you draft and file the Articles of Organization. The Articles of Organization, or Certificate of Formation, detail your LLC's name, purpose, and management structure. Complete the state-specific Articles of Organization. Have it signed by all the business owners and submit it to your state. States like New York and Nebraska may require publishing in a local newspaper before filing your documents. Develop an operating agreement. An operating agreement is crucial for defining the internal workings of your LLC. It covers aspects such as profit distribution, procedures for member exit, business funding strategies. Creating this agreement helps prevent future disputes among partners. When we set up LLCs for clients, we provide an operating agreement. Step number 5, comply with additional state and federal requirements. After filing your LLC documents, you must fulfill other legal requirements to operate your real estate business. These may include obtaining a general business license, applying for an employer identification number or EIN from the IRS, and submitting annual business reports. Requirements vary by state. Final thoughts. In summary, forming a real estate LLC is a smart move for those committed to serious real estate investing. It provides a robust liability protection shield compared to individual or sole proprietorship ownership, and offers more favorable tax advantages than S corporations or C corporations. While the process of establishing an LLC is generally straightforward, state-specific regulations can add complexity. For additional guidance, consider reaching out to our professional LLC services at assetprotectionplanners.com to streamline your setup and ensure compliance with all legal requirements. Subscribe for more updates, and we'll see you next time. This is The Business Guy.